We've probably all heard the expression, buy low, sell high. But how do you actually do that? I don't know about you, but many times I've thought the market was at a low point just to buy it and watch it go further lower. But how do we actually spot and take advantage of moments in which the market sells off dramatically and we can actually get a discounted price on the markets? Well, in this video, I'm going to be talking a little bit about one of my favorite charts in the financial markets to help spot opportunities based around volatile periods in market times. What you're looking at is the volatility index, or the VIX. And the VIX is a great barometer of market sentiment. It's often referred to by many investors as a fear gauge because the VIX essentially spikes when markets are fearful and it drops substantially when markets are feeling confident. Let's just take a look at some of the notable moments of history by switching over to a weekly chart. And in recent times, you can see back in the April of 2025, tariff scares that we've seen here this year, we had a huge spike of volatility. And then if we go back to the carry trade unwind concerns or the Bank of Japan stuff that was taking place in August of 2024, we saw a huge spike of volatility there. And then we can go back in time to maybe the most infamous recent history example, which was the COVID pandemic. Volatility spiked dramatically. And what you might recognize about each one of these events is that while they scared the market in the short run, in the longer term, these were really good buying the dip opportunities on things like the S&P 500, the NASDAQ, and the Dow Jones. Specifically, the VIX shot up to over 80 during the COVID pandemic at one point around March of 2020. In August of 2024, the VIX spiked up to 65, and in the 2025 tariff trauma stuff that we saw, it nearly hit a reading of 60. And when volatility spikes like this, what is this actually signaling about the financial markets? Well, usually this means that the markets are selling off big. Take, for example, the recent sell-off that we saw in the S&P 500 in April and May of this year. What you can see is that in April, the volatility index spiked dramatically, just while the stock market was in the process of actually bottoming. What often happens in these serious geopolitical or market sell-off freak-out moments is that volatility will skyrocket just as the stock market is nearing a low point. Now, this is, of course, using hindsight to our advantage. We know that the market bottomed out and reversed very sharply here this year. And we know also that historically speaking, this most of the time historically has actually been a pretty good time to buy stocks. But it does not guarantee future results, and that definitely needs to be said before we proceed with this video. However, historically speaking, when you get a very large increase in the volatility index alongside a sharp drop off in the stock market, it historically has been a more often than not sign that the market is close to a bottoming point. Specifically, you can see that around the 7th of April, we hit a high point in the volatility index, almost nearing about 60. Have you ever thought about trading futures, but it seemed a little bit overwhelming? I totally get it. Trading in general is very overwhelming at first. It can also be confusing to know how to trade gold or how to trade Bitcoin and what you need to do these things. But I wanted to tell you about today's video sponsor, Plus 500. With Plus 500's futures platform, you can trade pretty much everything in one broker. You get access to things like the S&P 500, NASDAQ, Bitcoin, natural gas, Forex, metals, crypto, and many other things. It's like having the entire market in your pocket. And I mean that literally because you can trade pretty much anything from your phone. With Plus 500, you can open an account with as little as $100. And if you're not ready to risk real money, no problem at all. They offer free demo accounts. These demo accounts never expire and it allows you to practice your skills before you decide if you'd like to go live in the markets. And with over 20 years of experience and 30 million global customers, Plus 500 knows the ropes well in the brokerage world. This builds trust around their brand as they have plenty of experience working with all sorts of traders and numerous resources for their users to explore the world of futures. So if you're ready to get started with that exploration, check out Plus 500 using the link in the description down below of this video. With that link, you can open up a free account today. Remember that trading in futures involves the risk of loss and is not suitable for everyone. Not all applicants will qualify. And thank you to Plus 500 for sponsoring this video. Going to April 7th, that was actually the low point of the S&P 500 sell-off, where the stock market, the SPX specifically, went down and touched a low of 48.37 or so, just as the volatility index was topping out. So back to studying the VIX, what I wanted to express to you here in this video specifically is how I use the volatility index to gauge potential opportunities specifically in the indices. The way I like to use the VIX is I actually like to use a 200 simple moving average. And what you can see here is that I've selected the inputs tab on my SMA indicator here on TradingView. My indicator length for the simple moving average is just a standard 200-day moving average, and I've made it yellow to stand out on my chart. I've also made the moving average thicker so that I can see it a little bit easier on my chart. Now, taking a look at this yellow moving average, you can see over time, the volatility index has a tendency to gravitate back to the yellow midpoint, or what we'll call fair value here in this case. So what we can see is that almost always when we get these big spikes in volatility, most of the time, the volatility index has quickly made a move back to the moving average that we see here. And so what we can see here recently, to take a current example, would be the volatility index jumped to 60, which, like I said, signaled for the most part a bottoming point in the stock market. And as the VIX continued to fall, the indices continued to rise. Now, as we've gotten all the way back down and now are below the moving average here, what would that signal? Well, just like the volatility index when shooting up can be a potential bullish signal, I also use the VIX as a potential cautionary tale or even a bearish signal on the indices if the volatility index reading of current, which is 16.37 at the time of recording, goes significantly below the moving average here in yellow. In fact, before all of this tariff uncertainty, I want to show you a recent example of the volatility index reaching a very low point, which was right around the elections. So, of course, during the November elections, we saw Donald Trump become the elected official. And you can actually see that the volatility index really shot lower for a brief period of time. The market almost got very euphoric with the idea of, this pro-business politician taking the White House. And so the market actually overshot in terms of its confidence or its euphoria, and actually this ended up being a opportunity to be contrarian once again, signaling that the market was feeling way too comfortable with things and stock market was running to new highs, and that actually was a pretty good contrarian signal when we hit a very low point below the moving average on the VIX. In fact, what that preceded was a period where the market actually dropped pretty substantially by over 20% at one point. So the way I generally read the volatility index is that if the volatility index reading is significantly above the longer term moving average, I take that as more of a contrarian bullish signal. If fear is very high, I want to be looking for dip buying opportunities. And when fear is very low or greed is very high and we get the opposite extreme, I may be more willing to either sell positions that I have, close out positions long that I may have on the indices, and actually look to either get short if I'm feeling bearish or potentially just stay neutral for the time being, as I personally find it to be a more difficult trade to short indices than to long them due to their upward drift nature. That being said, keeping an eye on the VIX is a key component to spotting opportunities in the markets through the history that I've been doing this. Having a high VIX reading, while is not always a guarantee that you're going to get a rapid deterioration in volatility back to the moving average, can still be an opportunity where I think that the risk to reward starts to become more favorable on the bullish side if it's a high reading, or the bearish to neutral side if the reading is very low. In a fascinating way, the market has a tendency to sort of spoof everyone's expectations of it very frequently. When market participants broadly think that the stock market's going to go up, it has an interesting way of trading sideways or down. And when everybody thinks that the market is going to crash, it has an interesting way of somehow finding a way to go sideways or up. Now, of course, there are exceptions to this example, but in my almost 10 years of experience in financial markets, this is a very repeatable theme that we often see. People de-risk and get scared all at once, or people get very euphoric and overly optimistic, and we can see it reflected specifically in the volatility index. Now with, again, the simple moving average, we can simply identify examples of these overstretches one way or the other, and we can factor that into our analysis. Now I do want to leave you with a bit of a disclaimer. There is much more to trading profitably than simply saying we have a high VIX or a low VIX. And in personal experience, this is a tool. This is not the holy grail, right? Nothing ever is when it comes to trading, but understanding that the VIX is a resource, it is a tool that we can all use, is a powerful thing to take advantage of. However, it does need to still be coupled with good risk management, with good approaches, with good strategies, entries, exits, etc. Before we go, I want to show you one additional tool that I like to look at when it comes to market sentiment. Now again, when the whole world freaks out about an event, it can be very scary to be contrarian to what the market crowd thinks, especially this year when we had the Trump tariffs really scaring the market because everybody thought we were going to go into a recession. Obviously not everyone did, but the majority of market participants felt bearish. The way I know that is not only just from the VIX, but also from this indicator that I've got on the screen right now, the AAII Investor Sentiment Survey. This is a weekly published survey that shows us the bullish, neutral, and bearish sentiment readings from survey respondents. And going back to that period in late March, early April, you can actually see that market participants were heavily bearish. Very few were neutral and very few were bullish. Most participants responding to this survey felt very bearish, and they stayed bearish all the way up until the time of recording this video, where people have actually started to get bullish again now that the stock market is back at all-time highs. So yes, the concept of buy low, sell high sounds too good to be true, and it's a bit tongue-in-cheek, and you hear it at every corner in the trading industry. However, there are some truths to it, and knowing how to spot opportunities through volatility index tools and market sentiment readings can be a very powerful weapon in your arsenal as a trader. If you enjoyed this video, make sure to hit the thumbs up button and remember to check out today's video sponsor. All the information is linked in the description and pinned comment down below. Thanks for watching. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.